The stock market is never obvious. It is designed to fool most of the people, most of the time. Never buy at the bottom and always sell too soon. It took me 5 years to learn to play the game intelligently enough to make big money when I was right. The market always does what it should do, but not always win. The only thing to do when a man is wrong is to be right by ceasing to be wrong. Whenever I have lost money in the stock market, I have always considered that I have learned something. That if I have lost money, I have gained experience, so that the money really went for a tuition fee. A man has to have experience, and he has to pay for it. Don't take action with a trade until the market itself confirms your opinion. Being a little late in a trade is insurance that your opinion is correct. In other words, don't be an impatient trader. To anticipate the market is to gamble. To be patient and react only when the market gives the signal is to speculate. Wall Street never changes. The pockets change, the suckers change, the stocks change, but Wall Street never changes because human nature never changes. Just remember, without discipline, a clear strategy, and a concise plan, the speculator will fall into all the emotional pitfalls of the market, jump from one stock to another, hold a losing position too long, and cut out of a winner too soon, for no reason other than fear of losing profit. Greed, fear, impatience, ignorance, and hope will all fight for mental dominance over the speculator. Then, after a few failures and catastrophes, the speculator may become demoralized, depressed, despondent, and abandon the market and the chance to make a fortune from what the market has to offer. There is time to go long, time to go short, and time to go fishing. Money is made by sitting, not trading. After spending many years in Wall Street and after making and losing millions of dollars, I want to tell you this. It never was my thinking that made the big money for me. It always was my sitting. Got that? My sitting tight. Men who can both be right and sit tight are uncommon. I've found it one of the hardest things to learn, but it is only after a stock operator has firmly grasped this that he can make big money. A prudent speculator never argues with the tape. Markets are never wrong, opinions often are. Remember this, when you are doing nothing, those speculators who feel they must trade day in and day out are laying the foundation for your next venture. You will reap benefits from their mistakes. The game of speculation is the most uniformly fascinating game in the world, but it is not a game for the stupid, the mentally lazy, the person of inferior emotional balance, or the get-rich-quick adventurer. They will die poor. Disregarding the big swing and trying to jump in and out was fatal to me. Nobody can catch all the fluctuations. In a bull market, your game is to buy and hold until you believe that the bull market is near its end. To do this, you must study general conditions and not tips or special factors affecting individual stocks. It is foolhardy to make a second trade if your first trade shows you a loss. Never average losses. Let this thought be written indelibly upon your mind. It isn't as important to buy as cheap as possible as it is to buy at the right time. There are times when you should be completely out of the market for emotional as well as economic reasons. It takes a man a long time to learn all the lessons of all his mistakes. Instead of hoping, he must fear, and instead of fearing, he must hope. He must fear that his loss may develop into a much bigger loss and hope that his profit may become a big profit. A loss never bothers me after I take it. I forget it overnight, but being wrong, not taking the loss, that is what does damage to the pocketbook and to the soul. It is literally true that millions come easier to a trader after he knows how to trade than hundreds did in the days of his ignorance. In a narrow market, when prices are not getting anywhere to speak of, but move within a narrow range, there is no sense in trying to anticipate what the next big movement is going to be. The thing to do is to watch the market, read the tape to determine the limits of the get-nowhere prices, and make up your mind that you will not take an interest until the prices breaks through the limit in either direction. It never was my thinking that made the big money for me. It always was my sitting. The price pattern reminds you that every movement of importance is but a repetition of similar price movements. That just as soon as you can familiarize yourself with the actions of the past, you will be able to anticipate and act correctly and profitably upon forthcoming movements. There is nothing new on Wall Street or in stock speculation. What has happened in the past will happen again and again and again. This is because human nature does not change, and it is human emotion, solidly built into human nature, that always gets in the way of human intelligence. Of this I am sure. Watch the market leaders, the stocks that have led the charge upward in a bull market. That is where the action is and where the money is to be made. As the leaders go, so goes the entire market. If you cannot make money in the leaders, you are not going to make money in the stock market. Watching the leaders keeps your universe of stocks limited, focused, and more easily controlled. Experience has proved to me that real money made in speculating has been in commitments in a stock or commodity showing a profit right from the start. All through time, people have basically acted and reacted the same way in the market as a result of greed, fear, ignorance, and hope. That is why the numerical formations and patterns recur on a constant basis. Emotional control is the most essential factor in playing the market. Never lose control of your emotions when the market moves against you. Don't get too confident over your wins or too despondent over your losses. Losing money is the least of my troubles. A loss never troubles me after I take it. I forget it overnight. But being wrong, not taking the loss, that is what does the damage to the pocketbook and to the soul. Every once in a while, you must go to cash. Take a break. Take a vacation. Don't try to play the market all the time. It can't be done, too tough on the emotions. The average man doesn't wish to be told that it is a bull or a bear market. What he desires is to be told specifically which particular stock to buy or sell. He wants to get something for nothing. He does not wish to work. He doesn't even wish to have to think. When I'm bearish and I sell a stock, each sale must be at a lower level than the previous sale. When I am buying, the reverse is true. I must buy on a rising scale. I don't buy long stocks on a scale down. I buy on a scale up. Without faith in his own judgment, no man can go very far in this game. That is about all I have learned, to study general conditions, to take a position and stick to it. I can wait without a twinge of impatience. I can see a setback without being shaken, knowing that it is only temporary. People who look for easy money in variable pay for the privilege of proving conclusively that it cannot be found on this earth. It isn't a hunch, but the subconscious mind, which is the creative mind at work. That is the mind which makes artists do things without their knowing how they came to do them. Perhaps with me, it was the cumulative effect of a lot of little things individually insignificant, but collectively powerful. A man may see straight and clearly, and yet become impatient or doubtful when the market takes its time about doing as he figured it must do. That is why so many men in Wall Street, who are not at all in the sucker class, not even in the third grade, nevertheless lose money. The market does not beat them. They beat themselves because though they have brains, they cannot sit tight. There is the plain fool who does the wrong thing at all times anywhere, but there is the Wall Street fool who thinks he must trade all the time. Professional traders have always had some system or other based upon their experience and governed either by their attitude towards speculation or by their desires. I did precisely the wrong thing. The cotton showed me a loss and I kept it. The wheat showed me a profit and I sold it out. Of all the speculative blunders, there are few greater than trying to average a losing game. Always sell what shows you a loss and keep what shows you a profit. They say you never grow poor taking profits. No, you don't. But neither do you grow rich taking a 4-point profit in a bull market. Where I should have made $20,000, I made $2,000. That was what conservatism did for me. If I hadn't made money some of the time, I might have acquired market wisdom quicker. One of the most helpful things that anybody can learn is to give up trying to catch the last eighth, or the first. These two are the most expensive eighths in the world. They have cost stock traders, in the aggregate, enough millions of dollars to build a concrete highway across the continent. He will risk half his fortune in the stock market with less reflection that he devotes to the selection of a medium-priced automobile. If I learned all this so slowly, it was because I learned by my mistakes, and some time always elapses between making a mistake and realizing it, and more time between realizing it and exactly determining it. I was utterly free of speculative prejudices. The bear's side doesn't appeal to me any more than the bull's side, or vice versa. My one steadfast prejudice is against being wrong. A stock operator has to fight a lot of expensive enemies within himself. When you know what not to do in order not to lose money, you begin to learn what to do in order to win. You begin to learn. Before I can solve a problem, I must state it to myself. When I think I have found the solution, I must prove that I am right. I know of only one way to prove this, and that is with my own money. I do not allow my possessions, or my prepossessions either, to do any thinking for me. There is nothing like losing all you have in the world for teaching you what not to do. I've known many men who were right at exactly the right time and began buying or selling stocks when prices were at the very level which should show the greatest profit. And their experience invariably matched mine. That is, they made no real money out of it. I have always found it profitable to study my mistakes. I knew that someday I would find out what was wrong and I would stop being wrong. I would then have not alone the will to be right, but the knowledge to ensure my being right, and that would mean power. I never thought that anything was irksome if it helped me to trade more intelligently. I certainly pushed my luck to the limit. What is the use of being right unless you get all the good possible out of it? It does not take a reasonably young and normal man very long to lose the habit of being poor. It requires a little longer to forget that he used to be rich. I get my pleasure out of matching my brains against the brains of other traders, men whom I have never seen and never talked to and never advised to buy or sell and never expect to meet or know. The speculator is not an investor. A speculator must concern himself with making money out of the market and not with insisting that the tape must agree with him. Never argue with it or ask it for explanations. Stock market postmortems don't pay dividends. After a man makes money in the stock market, he very quickly loses the habit of not spending. But after he loses money, it takes him a long time to lose the habit of spending. Fear keeps you from making as much money as you ought to. I suppose it is the contagion of example that makes a man do something, because everybody around him is doing the same thing. Perhaps it is some phase or variety of the herd instinct. You cannot always sell out when you wish or when you think it wise. You have to get out when you can, when you have a market that will absorb your entire line. Failure to grasp the opportunity to get out may cost you millions. I learned that the weaknesses to which a speculator is prone are almost numberless. A man must know himself thoroughly if he is going to make a good job out of trading in the speculative markets. There was as much to learn from partial victory as from defeat.